Happy Monday. Happy Monday. Happy Monday. I'm so glad to be back in the building. If you are here live, type live in the chat. Listen, I got some details for you today. I'm so excited. Before we get started, let me make sure I'm live on this other platform. I have to make some changes real quick to Facebook. Makes you work extra hard to be live on there. Anyway, I'm so excited to be back here. It is March 10th. It is another beautiful Monday. I know some of y'all sleepy because you lost that hour of sleep, but you don't want to miss this. Grab your pen, grab your paper, grab a friend, hit share, share it to your page, share this video with friends, especially our women, because today is part 3 of the policy that every Black woman needs and why we need it. And so today we're going to talk a little bit about how to use the cash value in a properly structured life insurance policy. So before we get into it, I want to bring you up to date on a few different things. I am so excited to be able to share with you today that April 12th, I'll be live and in the flesh in Delaware, Middletown, Delaware, and I will be one of the keynote speakers for the Built to Last conference. And I'll drop that link in the comments once I refind it. But I'm glad to be there. That's going to be hosted by the Dr. Dawn Paramore. She's a leading expert in mental health in the Delaware area, and I'll be coming to bring the financial information. So if you want to register for that, I will share the link. If you're in the Delaware area, then we can get face to face. I can hug you and we can talk about all the things. So I'm excited about that. Hi, Phyllis. Hey, Karen. So here's the thing. We got so many great things going on. That's just one conference. Then in the beginning of April, I'm going to be doing a virtual masterclass. For those of you who have asked, I'll be sharing that link out. So DM me your email and I'll send you a direct link. But that masterclass is specifically for women who want to level up their finances and just really get better at their money and master the money that they're bringing in. So I'm really excited about that. And most of all, I'm just excited to be here live with you every Monday. I look forward to Monday nights at 8:30 because I get to share with you some of the things that I learned in the financial industry in a real and practical way so that you can take it back and discuss it and find ways to add value to your life. Now, it wouldn't be a Monday if I didn't give you an affirmation. So this week's affirmation is going to be: money flows to me effortlessly, frequently, and abundantly, enriching my life and allowing me to be a blessing to those around me. So this week's money manifestation is: money flows to me effortlessly, frequently, and abundantly, enriching my life and allowing me to be a blessing to those around me. That is our manifestation. We do manifestations because we have so many things coming in that we have to reprogram ourselves, especially when it comes to our life, our lifestyles, and our money. And so I always do affirmations on a daily basis, and I usually just share with you a snippet of that every week so that you can manifest the things that you want and speak the words that you want. So before we get into it, I want to ask you a question, ladies. And I don't know who's on here. Just go ahead and chat, say hello. But if you're already making 6 figures, ladies, I want to ask you this question. Why aren't you a millionaire yet? If you're already making 6 figures, why aren't you a millionaire yet? And it's a tough question to ask, right? It's a tough question to answer. Here's the deal. Here's what I'm finding is that we know how to make money. We know how to spend money, but we haven't quite mastered the ability to leverage money and grow money. And that's part of the reason why I come to you each week to talk to you, because we have to learn how to grow and leverage money in order to go to the next step, into the next stages of our financial lives. Because at the end of the day, you can make all that money and you can lose it. I know, and many of you know my story who've been here. For those of you, it's your first time, say hello in the chat. I know there was a time I was making double six figures about 10 to 15 years ago, and I lost my job and I couldn't figure out why I was struggling because I knew how to make the money and I knew how to spend the money, but I had not mastered the ability to grow and leverage the money. So there wasn't as much money saved up to move forward. Now, did I have money saved? Yes, I had money saved, but it wasn't the amount that you would think someone making that amount of money would have saved, invested, or put into strategic places. So, because it's not always just about how much you make, it's how much you keep and grow so that it will multiply. And that's why I come on here so that you can learn ways to multiply and you can move from where you are to a place where you can master the things that you're doing. Now, today, I always talk about cash flow. Some of this is going to touch on some tax strategy. It really is going to be about wealth protection and multiplying your money. So, as we go through today, I'm going to take you through some key things that you should know about the cash value in the life insurance policy. And you're probably thinking, I don't need to know about that because you probably heard of one. Somebody had a few dollars in it and it wasn't a big deal. And it was $5,000. And why do I need to know how to use just the cash value of life insurance policy? But what if I told you it's the number one place people put their money strategically in order to reduce their taxable income, in order to have tax-free loans, in order to have access to money at any time, anywhere without a credit check and without having to have a full-time income to have access to the cash? Then would you want to know a little bit more about it, right? So I'm going to take you through a few different ways that we can leverage the cash value of the life insurance policy as women as we move forward. Now I'm going to rewind a little bit. If you missed the first part one and part two, go back to part one and part two after you watch this one. But one of the ways that we can look at using the cash value in the life insurance policy is to supplement our retirement income. Now, I don't know what age, many of us are at different stages and ages, but whatever age you are, if you have started thinking about and planning for retirement, which you should start and think about planning for retirement, even if you're just 22 and you're in your first job, it is a way to supplement that retirement. Now, I have clients coming to me now because of the way things are looking in the market, trying to figure out how to redirect what they are putting in their retirements and how to get out some of the money that they put into their retirement. And the good news is you put the money into the retirement. The bad news is you have to follow the rules to get the money out of the retirement. So if you're not within 5 years of retirement, there's no wiggle room. That money's there to stay. But if you're within 5 years of retirement and the rules of your qualified plan allow you to roll or move money out, then there's ways that you can be assisted to move it and work with a professional to get that set up. Now, the way that policy users use the cash value in the retirement plan as a supplement, some of my clients use it as their play money or a play check. It's outside, it's already taxed. They're not worried about tax coming out of it anymore. The only thing that they're really contending with is inflation, is how much is this money worth in the future than it is today. Because as you know, with inflation, as it grows, your dollar becomes worth less goods and services just over time, right? But really providing that little extra stream in the golden years, that little backup plan for extra money. So as I say, you don't have to become the bag lady in New York in retirement if when other accounts are set up, because we use the tax-free loans or withdrawals, and I have to do a video on the specifications of those and when not to do it. 99% of the time we're doing tax-free loans, just to be clear. To ensure financial stability so that you don't have to rely on just your retirement accounts. It also doesn't have a required minimum distribution. For my clients who I know are in their late 60s and 70s, they have a required minimum distribution on all their funds. And if all they have are qualified plans, guess what? They got to take that money out. And then once they take the money out of those accounts, it becomes taxable. Not so if the funds were placed into a properly structured life insurance policy that accumulates cash value. Another way you can use the cash value in the policy is to fund major expenses. You're probably like, what? fund major expenses? Yes, you can fund things such as the down payment on your home, financing your children's education. You can use it to start a business. I'm going to go into a little bit more detail on that in the back end. This approach allows you as the policy owner to utilize the accumulated value without incurring any additional debt or depleting your savings. And the key here is you're using the amount that is accumulated. What I hear people say, or I've seen on in various spaces and places, is don't think that you're going to start a policy that has cash value to build up today with, let's say, $500, and in 30 days you're going to have $5 million available to you. That's not how it works. You have to accumulate the cash. It's based on the cash that you accumulate over time, right? And so in that example, if someone's doing $500 a month, then at the end of the year, they could potentially have about $4,000 to $5,000 in cash value, depending on the cost of insurance and other different things. But it does even out, and the cost of insurance becomes negligible, and you have so much cash value that's available to you. I have clients that have over $500,000 to $1 million in cash value just because of the amount of money they committed to putting into it and getting started and being consistent. And compound interest does kick in. Now, the other ways that you can use it is it will serve as an emergency fund, right? This cash value is a safety net for unforeseen expenses such as medical emergencies, urgent home repairs. Accessing the funds is super simple and you can get access to it. And I've shared this story before. There was a time when I got laid off a few years ago, about 10 years ago. And I forgot about the cash value component in my policy. And when I called, because when you're not working, you're calling and canceling stuff. I called to cancel the policy. And the lady said, well, ma'am, you got almost $10,000 in cash in there. I said, I have what? And she said, you need this cash? I said, yes, I need it. And she sent it to me. Not she, but the company sent it to me because I had forgotten about the policy. I had started 15, 20 years before and was just being a good steward, making my payments, thinking, oh, there's a death benefit for my family, if something happens to me. But at the time, I wasn't thinking about the cash component of it. It wasn't what my focus was when I got it. And so later on, fast forward 10, 15 years, money I wasn't even thinking about has compounded and grown. And now this is the emergency fund I need to fill the gap as I'm getting reemployed. And so it has those things. Now, in the case of extreme situations where maybe you can't pay your policy, the cash value will pay your policy. The other thing is to really take a look at the estate value. It does have some, because it is a life insurance policy, there will be some wealth transfer, right? You will be able to pass those funds on to someone else once you are no longer here, or as I say, you reach the upper room, as you will. So if you're with me so far, in the chat, tell me what way did you hear that may benefit you to use cash value in your life? And then I'm going to keep on going. But tell me in the chat some ways that you heard me say already that you feel like will benefit you going forward using for your life. Now, the other ways that you can use the cash value is for those who need additional funds. If they have medical issues, it can go to help fund any type of long-term care expenses if you have the cash value, in addition to any of the riders that may be on the policy, right? Now, we do encourage you to look into getting a fully underwritten life long-term care policy. But in the event that you do not have it, there will be cash available to supplement that in the time of need, if needed, right? Now, medical and estate. Okay, I see you, Phyllis. Medical and estate planning, right? And so then there are things that you want to do. So let me pause for a moment and tell you about some cool people that you might know who have used the cash value in their policies for their businesses. So Walt Disney used it to fund a part of Disneyland. J.C. Penney, when he was alive, he saved J.C. Penney during the Great Depression. He didn't save it this time, but he did in the past. Doris Christopher, the founder of Pampered Chef, has used the cash value in her policy. Many former American presidents, senators, and congressmen use the life insurance policy as a part of their financial strategy to support them and to put themselves in a better tax situation when they go into retirement. Now, some statistics, and I'll drop this in the link because I was just looking on Investopedia. Hey Sylvia, I was just looking on Investopedia, and it talked about accumulating cash for your family because using this specific tool, it gives you some freedoms that the other vehicles don't allow, right? And so we have to really just start thinking about, and I added the chat from Investopedia. Cash value is money built up in the policy, essentially. It's going to grow tax deferred. It comes in various forms. And so we want to really just think about what are the benefits to us. Now, I'm going to tell you the cool ways you can use it. Anybody here looking to start a business, want to be a business owner, you are a business owner and you're looking for strategic ways to do different things, this is the segment for you. So I actually am a part of a coaching program where all we do is work on strategic ways to use the cash value in our policies to build businesses. And so I have colleagues who are using it for real estate investment, doing rental properties, doing flipping, doing short-term rentals through the various platforms, doing what they call just the investing with someone else who did all the hard work and the flipping, right? Then I have people who are doing drop. I know people who are doing where we work together to do drop shipping business. They're setting up private label companies where they're private labeling different business models for themselves and selling it. They're doing subscription boxes. They're doing print on demand. They're buying franchises. They're also buying rent-a-car, like the ride share companies. So Toro and things like that. They're setting them up and using the cash they built up in their policy. Now, again, this wasn't day one. They've gotten enough funds in there where they're able to leverage it, right? People are doing health and wellness businesses, fitness coaching, spas. The big thing now is this is one of the ones I've added to my portfolio, my personal portfolio, is investing in stock trading for my business. So I use the cash value in my policy to buy stocks and trade and do options trading and do covered calls. Now I'm still not good at it, so don't call me and ask me how to do it because I'm just working on mine. But using it to do that, but also using it for travel businesses and transportation. If you are a trucker or a trucking company, the car rental, which I already mentioned. And so beauty companies. And so there is limitless. If you can think of the business, there's a way to figure out that you can use it. So, but here are the key benefits of using cash value to start a business. There's no credit check or loan application. There's flexible repayment, no monthly payment plans or loan payments requirement. Your cash value continues to grow when you borrow. And you're going to have tax-free access if structured properly. So those are some of the key benefits, right? And so we really want to get into leveraging the things we don't know about vehicles we were not privy to. And one of the things I share with some colleagues earlier today is we have to think about what we know about finance and then try to find out what we don't know. Because if someone else is doing it who makes more money than you and who is leveraging it, then there must be something to it. And to think about how we can add that to what we do is the most important thing. And the key to being able to come from a place where we're using debt to buy stuff is and moving to where we're putting ourselves in a place to leverage any type of debt or loan or cash that we have to make more money. Because at the end of the day, for many of us, we all have an eye opener to figure out how do we increase the income stream coming to us instead of the outflow leaving from us. And so when we start to think about it and think about the ways that you can leverage it, ways that you can access it, ways that you can move forward, these are some of the things that are important for us to look at. So now, sometimes people ask me these questions and they say, well, what if I get a loan from my cash value in a policy? What happens if I don't pay the loan back? Well, what will happen is it will reduce your death benefit by any outstanding loan balance, and interest is deducted if and when you pass away. There is a risk of policy lapse. However, for most people, it has to just be structured correctly, and you still can take up to the maximum loan, and there won't be a policy lapse. But I do have to inform you that there is some risk. Depending on the type of policy and how it was structured, it could be a taxable event, but in most cases, it is not. And those are the top three risks, really. And so let me give you an example of how the math works on a loan policy before I come off today. So let's say you have a permanent life insurance policy with $100,000 death benefit and you have $50,000 cash value because you've been paying into the premiums and you built it up and it's there. And you take out a $30,000 loan at a 5% interest rate. You then use the $30,000 in this example. Let's say you invested it in the stock market and you bought some Bitcoin and you got into some futures and some different investments because you wanted to, see if you could increase the funds. You choose not to pay the loan during your lifetime, right? If you pass away, your beneficiaries will receive $70,000. That's the $100,000 minus the $30,000 loan balance, minus any accrued interest. Now, I didn't subtract the interest from that example, but that is essentially the way it will work. So it's an unstructured loan repayment. You pay it back on your own terms. It's not a difference where you have to prove something. The difference between taking a policy loan and, let's say, using the equity in your home. I get this question all the time. When you want to use the equity in your home, you have to go to the bank. You have to submit an application. You have to be credit worthy. It means your credit has to still be in order. You have to be in a position to repay that equity payment either through monthly payments, especially if you're doing a HELOC or you're doing a loan trust. You have to be in a place to repay it. Now, what happens if you lose your employment or your main source of income, but you got a whole bunch of equity in your home? What happens is you're not eligible for the access to that equity unless you sell the home, because in order to take out a loan against the home or do any type of refinance, you have to literally be able to rebuy the home. You have to be eligible in all the financial ways to buy it. The difference is that same amount of money or the same amount of cash value, if you have built it up in your life insurance policy, the only qualification you need is to call them, continue making your regular monthly premiums, and request the loan. That's it. It seems so simple. So tell me in the chat, what have you learned that you can use for yourself in relation to cash value policy? Would you want to use it for business? Would you? And I already saw that someone wants to use it for medical and estate. Would you want to use it to consolidate your debt? You want to do real estate do education payments for your family? What are the things that you're thinking, oh wow, I can do that with this? And so I asked that question because we really have to start thinking in actionable ways. How can this benefit me? How can I move forward? So that is the show today. And I'll be back next week. And next week is what? The 100th episode. So I'm so excited. Be sure to tune in next week. I'm going to have door prizes. I'm going to have lots of guests popping in. We're going to have a lot of fun next week. Not that we don't have fun every week, especially when you're getting this good financial information. Next week, I will be launching the link for the masterclass, so you'll be able to sign up for the masterclass and get more information. You're welcome, Phyllis. Thank you for joining. Aaliyah, Millionaire Ladies Mom, thank you for joining. Sylvia, Karen. And so these are some of the things that we have to really just think about. What are the things that we want to do, and how can we preserve and protect ourselves as we move forward with our finances, with our spirituality, and with our mindset? So it's your girl, Saran. Peace, love, and light. Let's get your money right. Bye.